Let's take a look at the first government debt auctions of the year, reopening 2 bond auctions this week and issuing fresh paper for 2022. Run us through the type of demand that we saw on Wednesday.
We saw the first auction for the 2012 on Wednesday, which saw some maturities from 6 years to 10 years on offer. On the 6-year tenor to maturity, 2018 maturity, we saw about 18 billion sold in that maturity at 16.987. And on the 7-year tenor to maturity, 2019 maturities precisely, we saw about 18 billion sold in that maturity too at 16% stop rate, while the fresh 10 years printed at 16.39. 35 billion was sold in total for that fresh issue.
That interest rate set at 16.39%, but the two other interest rates for 2018 and 2019 ticking higher there, those yields. Is that a concern going forward? Any signal as to what the market is thinking right now?
I don't think it's any concern right now. If you look at the 2018 maturity that printed at 16.989, higher than the other longer tenor, you notice that bond's actually not been trading in the secondary market for a while. And considering the amounts that actually put on offer, which will be the last reopening for the year in that series, a lot of interest actually did not go through that particular maturity, and that saw that disconnecting yield that we witnessed at the last auction.
Let's look at the Naira, because we saw some strength coming through on the interbank market this week, opening the week at 161.30, 161.40, and closing sitting around 160.50, 160.60 right now. Do you think that the strengthening of the Naira can persist into next week and perhaps break 160?
Well, possibly yes. Don't forget that the strengthening that we saw on Naira this week was strictly driven by the inflows that came through from our oil company sales during the week. Market opened at 161.30.40 at the beginning of the week and traded to the low of 159.50.60 during the course of the week before it finally settles around 160.50.60 right now. I think going forward to next week auctions, when CBN will offer probably between 200 to 250 million on offer on Monday, WDAS. I think markets will remain relatively stable at this level, and I strongly believe that the stability on the exchange actually could be maintained going forward.
What exchange rate have we seen the CBN coming to the market and offering that money to the local banking sector at?
Sorry, I didn't get that.
What exchange rate has the CBN currently been offering that paper at for the markets?
Okay, at the last auction, if you what they did on Monday, between Monday and Wednesday, I actually could say that net they actually revalued the currency by 1 kobo. On Monday, they sold about 250 million and depreciated about 14 kobo. But on Wednesday, they reversed the position by appreciating the currency by another 15 kobo. So eventually, the market closed around 156.85. Let's focus
in on the inflationary environment right now, in light of the fact that we've got the MPC next week. The Senate has recently proposed raising the benchmark oil price to $75. That's from initial $70 for the 2012 budget. Are you concerned about the impact that this is going to have on inflation?
Yeah, as long as the budgetary the expansionary budgetary plan is still in place or still in sight, I think it's going to be a threat to inflation going forward. But looking at the MPC that's going to hold next week, I don't think there's going to be any major threats going forward in that meeting, because just like the CBN governor had said, this is just the first of its kind for this year. And if you noticed the trend in inflation from the last figure released, we saw about 20 basis point dropped from the last level of 10.5 to 10.3. For now, I think as long as inflationary threat is still not as imminent as we can see, markets will remain around this level. I don't think it's going to be a threat. But going forward, if budgetary expansion is actually setting from what the government is planning in terms of spending and adjusting the benchmark from 70 to 75, the possibility is there that we actually might see inflation threat going forward.
And of course, the fuel subsidy removal, the partial fuel subsidy removal now will have inflationary impact surely going forward.
Sorry, I didn't get that question.
The partial removal of the fuel subsidy, surely that's going to have implications for the inflation outlook going forward.
Sorry, I still didn't get that.
With regards to the fuel subsidy and the removal of it, or the partial removal of it, what is the implication that this will have for inflation further down the line?
Oh, okay. For now, we've seen the adjustment from 65 to 97 naira in the market. Don't forget that, well, the initial reaction was around 141 before the government actually listened to the voice of people by reducing to 97. I think going forward, we'll start to see the domino effect on the price of foods and transportation. And as this continues to happen, there actually might be some kind of threat coming on inflation. And at that time, I think it's going to be a challenge.
Is there any likelihood that the governor will heed the calls of the finance minister to actually cut rates in 2012? Although he's saying we won't have any change in interest rates at next week's MPC meeting, is there any likelihood right now that we could see a cut in interest rates?
Well, for this meeting that is happening next week, I think possibility is not there. I think the MPR will be left flat at this present moment. But going forward, if the situation remains the same and there's no real threats to the economy in terms of inflation and all those things, the possibility is there that actually might be a cut in interest rate. But that actually might happen towards the end of the year. The real returns on investment is still very positive, and stability in the economy is there. Then for governments to actually encourage manufacturing companies to produce, and for the growth in GDP and all those things to happen, then we actually might look at possibility of cutting interest rates.